The Bank of Zambia recently made one of the most important changes when it comes to benchmark bonds in Zambia. Effective 31st March 2026, benchmark bonds are now the 5-year, 7-year, 10-year, and 15-year GRZ bonds. The 2-year and 3-year bonds are non-benchmark bonds. These reforms might look like they don't affect you as a retail investor. Perhaps they just affect the pension funds, commercial banks, and fund managers. You will be misled if you think that way, because these reforms are at the core of how the bond market is going to operate going forward. And it also affects the price of the bond, which is why when you looked at the April auction results, you may have noticed that bond investors did not pay the face value amount. They paid a price which was higher than the face value, the premium. In today's video, I'm going to explain what a benchmark bond is and why it is important for you as a retail investor to understand these new changes and how they affect your money, particularly the price of the bond. But before we get started, I'd like to encourage you to subscribe to my channel by clicking the subscribe button. You will find it at the bottom. It is down here. Click subscribe right now. Let's get started. Hello and welcome back to my channel. I'm Mukonki, Mukonkela. I'm a chartered accountant and financial expert. On this channel, I simplify personal finance and investing. I help you to buy your first bond, shares, or unit trusts. And if you generally want to grow your money, then you are in the right place. Don't forget to also join our Telegram group, and I will share the link in the description at the end of the video. What is a benchmark bond? The first thing to understand is that a benchmark bond is not a new type of government bond that Bank of Zambia has introduced. A benchmark bond is simply a bond which government intends to reopen in future. A benchmark bond maintains the same ISIN number. An ISIN number is simply the international identification number for a bond. It's like an NRC. It is unique to each particular bond. When Bank of Zambia reopens a benchmark bond, it is reopened with the same serial number. The coupon rate, which was determined when the bond was first issued, is maintained. It does not change. Same as the coupon dates, same as the maturity dates. The only thing that changes is the yield rate. This is a very important point for you to remember. When a benchmark bond is large and actively traded, it becomes the main reference point for pricing on the market. It becomes the benchmark. That is one other reason why benchmark bonds are important. So we've always had benchmark bonds. In fact, there's an old video that I did, which you can find up here, where I give you an example of a reissued benchmark bond before this 31st March public notice was issued. So benchmark bonds have always been around. What has changed is the strategy that Bank of Zambia is going to implement. The Bank of Zambia now intends to focus on issuance of smaller bonds, but with bigger quantities, and will build this up by reopening the benchmark bonds frequently. So the same serially numbered bond will be reopened in future and build up to a target of 10 billion Zambian kwacha per bond tenure. The easiest way to understand benchmark bonds is to look at a real example. I would like us to look at the February 2026 bond prospectus. Notice the 10-year government bond, ISIN ZM 1000007642, coupon rate 16.6%. This was the original issue of this benchmark bond. It was done in February 2026. Now, let's move to April and find this bond because it was reissued in April. Notice something interesting. The same bond appears again. Same ISIN, same coupon rate, same maturity date. But this time it is described as a reissue. This is a benchmark bond opening in practice. The bond already exists. The coupon rate is already determined. Government simply sold additional quantities of the same bond. It increased the quantity of the same bond. If we look at the February 10-year benchmark bond that was reissued in April, you are going to see that in February, the total face value amount allocated was 2,995.7 million. That is around 2.9 billion Zambian kwachas. The same bond was reissued in April so as to increase its quantity. Note how much additional bonds were added to this reopened 10-year benchmark bond. The face value amount allocated for the 10-year bond was 34.68 million. We already established that the April bond auction had a low subscription rate. So don't be surprised by the 34 million. However, when you add these two amounts, you arrive at around 3 billion Zambian kwachas. And we can already see that Bank of Zambia has started building up to 10 billion Zambian kwachas for this 10-year bond. So you might ask, why has government made this change? What is the importance of these benchmark bonds? How does it affect me as a retail investor? For you to understand the importance of benchmark bonds and the reopening and increasing of the quantity per tenure of the benchmark bond to 10 billion Zambian kwacha, you need to understand the problem Bank of Zambia is trying to solve. And I'm going to talk about three major problems. The first and most important problem is liquidity. If I asked you today to sell a bond which you may have bought years ago, you may find it difficult to find a buyer for that bond. This is because in the past, Bank of Zambia has issued many bonds with different serial numbers maturing at different dates of smaller quantities. That meant that few people were holding on to a particular bond, and many would actually hold the bond until it matures. So it would be very difficult for you, if you wanted to sell your bond, to find a buyer for your bond. And most times, there's no readily available secondary market where the bond is even trending, where you can see the actual bond on sale. So the most likely place for you to go and find a buyer for your bond is the commercial bank. And the commercial banks might also take time to find a buyer for that particular bond that you are trying to sell. So that is one of the problems. To solve this problem, Bank of Zambia has decided to concentrate issuance or reopening of smaller bonds, but increasing their quantities. So instead of having 500 million, for example, for a 10-year bond, Bank of Zambia intends to continue reopening that 10-year bond until it gets to 10 billion Zambian kwachas. So now just look at this. If you have a bond that has only 500 million compared to a bond that has 10 billion quantity, which one do you think you would easily find a buyer if you wanted to sell? If you are holding on to a bond with a quantity of 10 billion Zambian kwachas, it means that there are many investors that are holding on to this bond. And if you wanted to sell your bond, you would easily find somebody who would want to buy off your bond. So that is one of the problems that the reopening of benchmark bonds is trying to solve. It is to ensure that we have liquidity in the bond market. The second reason is price discovery. If I asked you today, how much do you think your bond is worth? What is the cost of your bond? Or if I asked you, at a yield rate of 16.2%, do you think your bond is going to sell at a premium or at a discount? Is it a good, does it have a good value? Most likely you wouldn't know. In fact, many retail investors don't know the value of their current existing bonds. What price discovery simply means is that if a particular bond is held by a lot of people, perhaps 10,000 people, imagine if we can build the quantity of the bond to about 10 billion Zambian kwachas, and then there are about 10,000 investors holding on to this bond, it would be easy for us to understand the value of this particular bond. When a bond rarely trades, like many bonds that are currently on the market, it is very difficult to find how much the bond is worth. But if it's easily tradable, it is held by many investors, the pricing is easy to discover, and it is much more transparent and a fair market-based price. The third reason is to strengthen the yield curve. A yield curve simply shows the returns investors demand at different maturities. The yield curve is one of the most important concepts in bond trading. Financial institutions use it, pension funds use it, fund managers use it, even the government uses the yield curve. Actively traded bonds help create an efficient yield curve. If the underlying bond is rarely traded, the yield curve becomes unreliable. When the yield curve becomes unreliable, the entire financial system becomes less efficient. That is why governments all over the world build benchmark bonds. It is to ensure that they have efficient financial systems that are reliable. Once a bond is reissued, an investor will not pay the same face value price of 100 kwacha. Why will investors not pay face value of 100 kwacha? This is because once a benchmark bond is reopened, a number of things happen thereafter. We've already established that even for benchmark bonds, once the coupon rate is set, that is fixed. It will never change until the bond matures. Same as the coupon payment dates, same as the maturity date. But what changes is the yield rate, because the yield rate is the desired return that investors want to make on their money. So when a benchmark bond is reissued, investors offer the Bank of Zambia their desired yield rate, and those yield rates go through the auction. Bank of Zambia starts allocating bonds, the quantities, based off the lowest yield rate until a final cutoff yield rate is determined. That final cutoff yield rate is the yield rate that the entire market is offered. So that yield rate changes depending on several factors, which also include the economic performance of the country, the monetary policy lending rate, as well as the value that an investor places on that particular bond. So the yield rate can be higher or lower or the same as the coupon rate. Let's take a look at the April 2026 bond auction results. If you look at the 10-year bond, you see the coupon rate is still 16.60. The cutoff yield rate dropped to 16.50. Face value allocated 34.68 million. Cost value allocated 35.93 million. The price calculated as 35.93 over 34.68 multiplied by 100 comes to 103.6. Notice something important here. The coupon rate for this 10-year bond is fixed at 16.6%, but investors only required a yield rate of 16.50%. Because the coupon rate for this 10-year bond was higher than the cutoff yield rate, investors paid a price above the face value, 100 kwacha. Therefore, they paid a premium. The relationship between the coupon rate and the cutoff yield rate is what drives bond prices. And there are generally three prices that you need to know. The first one is a premium price, where the yield rate is lower than the coupon rate. The price is normally above the face value. In this case, it's more than 100 kwacha. The second price is the par value. The par value is where the coupon rate matches the yield rate exactly. Had it been that the cutoff yield rate was 16.6% and the coupon rate was 16.6%, then it means the bond was trading at a par value. This is what we've seen in the past, and I'm sure you've seen this from previous bond auction results. Where the yield rate is higher than the coupon rate, then the bond is trading at a discount. So the reason why investors paid 103.6 kwacha instead of 100 kwacha is because the bond was selling at a premium. Now, these are not the only prices that you need to be aware of. Let me introduce you to two other prices. The first one is called the clean price. The second one is called the dirty price. The clean price is the price that reflects the value of future cash flows discounted to today, or the present value of future cash flows based off the cutoff yield rate. That is the clean price. It is purely the price that reflects the value of a bond. The dirty price is the clean price plus accrued interest. If you add the clean price plus accrued interest, it gives us the dirty price. So you may be wondering, what is accrued interest? Accrued interest is the interest that's been accrued from the last coupon payment date to the date that you are buying the coupon. So let me give you an example of this 10-year bond. If you had bought the bond on the 27th of April, which is the settlement date, and the bond was issued on the 16th of February, it means the number of days accrued we count from 16th February 2026 to 27th April 2026. If you count those number of days, it's going to give you 70 days. Those 70 days are the accrued number of days. You will need to pay for those days, because in August, when you get the coupon, you are going to get the full coupon for the entire 6 months, but you owned this bond not for the entire 6 months. You bought this bond on the 27th of April when some days were already accrued. That is what accrued interest is. So that accrued interest is added to the clean price, and that is reflected in the price that you pay. So in fact, the premium is comprised of the accrued interest or coupon, as well as the actual value of the bond. And if you look at the 10-year bond, you actually discover that majority of that price, the 103.6, can be attributed to accrued interest, as I'm going to show you in my next video when we actually look at the bond calculator and input in all these figures to arrive at the clean price and the dirty price. You are going to see that the bulk majority of the 103.6 kwacha can be attributed to the accrued interest, and only a very small percentage was attributed to the value of the bond. So what should you do as an investor with all this information? As an investor, you need to look at the bond prospectus, understand the coupon rate, and also look at previous bond auction results so that you are able to estimate the likely cutoff yield rate. And then you're able to determine the settlement amount, the amount that you'll be required to pay in the next bond auction. This is what I'm going to do in my next video when I introduce the benchmark bond calculator. It is an estimate because you cannot get the actual cut-off yield rate. Remember, the cut-off yield rate is determined in an auction, but we can always estimate based off previous bond results. Benchmark bonds are not a new thing in Zambia. However, the strategy that Bank of Zambia is implementing has changed. Bank of Zambia has increased the sizes of benchmark bonds, and they will reopen these benchmark bonds frequently so as to increase the quantities and ensure that we have a highly liquid bond market and the price is easy to discover, and also to enable a general development of the overall bond market. And of course, there are other factors such as attracting interest from institutional investors as well as foreign investors. But these three are the major reasons why Bank of Zambia is going to be reopening benchmark bonds. I would like to hear your views and how you feel about these developments, and how you intend to participate in this month's bond auction. Remember, we have an auction this month. So don't forget to join our Telegram group where we support each other as investors and also inform each other of the developments in the capital market, as well as generally news that has to do with investing and personal finance. Thank you so much for joining me today. If you haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. You're going to find it at the top. It's up here. Click subscribe right now. And don't forget to like, share, and comment, and turn on the notification icon so that you can be reminded next time I release a video when I look at how to use the benchmark bond calculator to estimate the settlement amount that you will likely pay in the next auction. See you next time.